Good morning, ladies and gentlemen. Welcome to Mahindra Lifespace Developers Limited Q3 and 9M FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Arvind Subramanian, MD and CEO from Mahindra Lifespace Developers Limited. Thank you, and over to you, sir.
Thank you, Lizanne. Good morning, everyone, and welcome to our Q3 FY23 earnings call. I'd like to thank all of you for participating in this conference call. A reminder, once again, that as you know, many of our key operating entities from the residential business, like Mahindra Homes and Mahindra Happinest, as well as from our IC and IC business, like Mahindra World City Developers Limited, Mahindra World City Jaipur Limited, and Mahindra Integrated Parks Chennai Limited, are not consolidated on a line-by-line basis. I'd like to take you through some of the highlights for the quarter and the year so far, the 9 months of the year. Let me start with the residential business. We've had a strong quarter with about 451 crores of pre-sales, bringing us to 1452 crores for the 9 months. You would remember that the full year FY22 was 1028 crores and the corresponding 9-month period in FY 709 crores. So on a like-to-like basis, it's 100% growth. This has come on the back of 4 launches. We launched a new project, Mahindra Citadel in Pimpri and Pune. This was the land that was acquired in April, and we launched it in November. So within 7 months, we've been able to get the designs completed, approvals in place, and been able to launch it to the market. We also launched the second phase of Mahindra Eden in Kanakpura in Bangalore. Again, the first phase was launched in Q1 of the financial year, received an outstanding response, and that encouraged us to bring forward the second phase by almost a year. It was originally slated to be launched in the next financial year, but given the response to the first phase, we brought it forward. We also increased prices quite significantly by almost 14%, and even at those higher prices, we've seen an excellent response in Mahindra Eden. We did a formal launch of Mahindra Happinest Kalyan 2. This was a project that was pre-launched in February last year. The main launch happened in December, and again, we've seen a good response there. And the fourth project that was launched was the second phase of Mahindra Happinest at Mahindra World City Chennai. Again, very successful first phase, which was launched a year back, 100% sold at that stage. We brought the second phase in towards the end of Q3. Once again, took the price up quite significantly, more than a 20% increase in price, and have brought it to market. In the coming quarter, we expect to launch 2 new projects, new activations, the second phase of Mahindra Nostalgia in Pune and a plotted development in Mahindra World City Chennai. A lot of our management time and effort this quarter is going to be on preparing for new launches for the next year, and particularly for the first half of next year. We would like to bring Andivali project to market in the first half of the next financial year. We would also like to do a full-fledged launch of Mahindra Citadel. What we did in Q3 was a pre-launch, but we'll do the main launch in H1 of next financial year. Within H1 of next financial year, we are also intending to bring our new acquisition on Hosur Road, which we had announced last month, to market. And we'll be looking at later in that year bringing both the Dahisar project as well as the Santa Cruz redevelopment project that we had announced to market as well. So we are looking at a busy FY24 from a new launch perspective. Turning my attention to business development for the residential business, as you would have seen, we've announced 2 new transactions in January. One was in Bangalore off Hosur Road, and the second was a society redevelopment project in Santa Cruz. Both of these are very attractive new opportunities for us. Bangalore is a market that we continue to build a presence in, and society redevelopment, as we had discussed, is an area that we have been keenly pursuing for almost a year. So it's very heartening to see our first breakthrough in the society redevelopment space. We are very excited about the prospects and opportunities in terms of bringing in premium products in fully built out neighborhoods in the city of Mumbai. And hopefully with this win under our belt, it should open the doors to many more wins in the quarters to come. Our overall BD pipeline, in the last call we had talked about pursuing a pipeline at various stages of maturity of in aggregating about 5,000 crores of GDV. Out of that, around 1,000 crores has got converted. Roughly 1,500 crores has either been dropped or we've lost. And we've added back about 3,000 crores of new deals in the pipeline. So today we are working on a pipeline of about 5,500 crores. Again, these are in various stages of maturity, and we are hoping that a reasonable proportion of these will get converted in the next 2 to 3 quarters. In this last quarter, we've also completed the conveyance of the Kandivali land, which we purchased from M&M, as well as our land, 60 plus acres of land at Thane off Ghodbunder Road. As I mentioned, we are working to Kandivali to market in H1 of the next financial year, and Thane, we continue to be on track to bring it into the market in the early part of FY25. Turning our attention to the industrial business, in the quarter we did 69 crores of industrial leasing. It's great to see the pickup in Origins Chennai and Mahindra World City Chennai. The last several quarters, much of our leasing has happened in Jaipur, but I have been mentioning that we've had a nice pipeline building up in our 2 Chennai parks as well. And it's good to see some of those deals coming to fruition in the last quarter. We continue to have a very active pipeline and are looking at roughly 50 acres of advanced pipeline to be converted over the next 2 quarters. This 69 crores of leasing in Q3 takes our year-to-date leasing to 255 crores, and this compares to 297 crores for the full FY22. So again, we're looking at a strong growth momentum in the industrial business as well. Let me turn it over to Vimal to take you through the financial highlights.
Thank you, Arvind, and good morning, everyone. Moving on to financial performance for Q3 F23, here are the key points. The consolidated total income stood at 198 crore against 74 crores in Q3 FY22. The consolidated EBITDA, which includes other income as well as share of profit from JVs, stood at a profit of 5.5 crores against a profit of 20 crores in Q3 F22. The consolidated PAT after non-controlling interest stood at 33 crores as against a profit of 25 crores in Q3 F22. Your company has debt of 280 crores at a consolidated level, while cash in hand and bank balance was about 228 crores. The cost of debt is 7.76% on consolidated basis, while standalone cost was also almost similar at 7.72%. These are the key highlights on the financial front. I'll now request if the floor can be open for questions, please.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Parikshit Concall from HDFC Securities. Please go ahead.
Yeah, hi Arvind. Congratulations on business development and strong pre-sales for the 9 months and the third quarter. So my first question is on the business development pipeline. Now, I want to understand that typically you said this quarter we have added 30 billion of new, 3,000 crores of new BD pipeline. So what is the timeline of closure of this 3,000 crores of typically how much will be the closure timeline where you will take some decision on this?
So typically I would say 2 quarters is what we would see as the maturity timeline for this pipeline. So between this quarter and next quarter, whatever gets converted, our experience has been gets converted within 2 quarters, and if it doesn't get converted in 2 quarters, it gets dropped.
Now coming back to the last quarter, we had 5,000 crores of BD. You said 1,000 got converted, 15 got dropped, and 2,500 gets carried over to this quarter. So do you expect it to close by whatever decision making happens and happen by this quarter end on the 2,500 crores?
Yes, a lot of it should either one way either get converted or dropped by the end of this quarter.
Okay. So if you can also give a breakup of the 5,500 crores of BD in terms of GDA, JVs and redevelopment, and also geography-wise, Pune, MMR and Bangalore.
Yeah, so roughly rough split about 2,500 in Mumbai, 2,000 in Pune, 1,000 in Bangalore, and outright is about out of that 5,500, roughly 3,500 is outright. 1,000 is JDA and another 1,000 is between redevelopment and plotted.
Just one more question on this GDV addition over the last 2 years. So we have added 3,800 crores in FY22 and now financial year to date we have added 2,600 crores. So what will be the total value of the land acquisition cost of this entire 3,800 plus 2,600? So if Vimal can answer that.
The acquisition cost of land for the GDV we've added 3,800 plus 2,600.
Yeah, 6,400 crores which we have added.
One update on that, Parikshit, you may have picked it up in our release yesterday. This year, the Pimpri land that we acquired, we've actually got some enhanced development potential there. So the value, GDV value has gone up from 1,700 crores to 2,300 crores.
Oh wow! So this year that is added to these years number, right? 1,700 to 22 is roughly about 500 crores. So 2,600 becomes 3,100 crores now. So roughly 6,900 crores in the last 2 years GDV addition.
Yeah.
So what will be the land acquisition cost, hard cost, which will be incurred, and how much has been paid till now?
So overall, Parikshit, the way it will operate, for example, it has got say Kandivali land where the payment is staggered. At an overall level, what you can assume, if it's not a JD or a redevelopment, usually the cost will vary between 15% to about 23-24% depending on the geography in which you are operating. That's what I will sort of stay with so far as the specific numbers are concerned, Parikshit.
Okay. But how much of this will be like paid off? What will be the pending cost on this GDV yet to be like incurred from the balance sheet?
We would have incurred almost about 400 crores in the last 9 months.
And what is the pending to be incurred on these?
Almost similar.
Okay. And how are you going to fund it, Vimal? I mean, how do you look at funding this?
So 2 things. So far as operating cash flows are concerned, the company continues to be fairly robust in terms of collections and overall cash flows. We are running ahead of our plans in that sense. That's one. The second important point is that the balance sheet, as you know, is completely sort of unleveraged, and to that extent there will be long-term borrowings, etc., which you will start seeing.
Okay. This last question to Arvind. So Arvind, you had this Alibag plotted launch, so just wanted to know what's the response there, and now you're planning to bring in the Chennai the MWC land plotted. So what's your outlook on overall plotted development as an overall strategy in the GDV? So do you think this can become big in the coming years? Because with Chennai, you are seeing a depleting presence besides the industrial. I mean, industrial, not much inventory is left. Resi is also coming towards an end. So how do you see the Chennai market where you started a big part of your business? So how do you see that play out for the residential piece? From the plotted side, if you can help us understand that, how will that product develop?
Sure. So Alibag and Chennai, very different. While both are plotted, one is Alibag is positioned at premium end of the spectrum, and Chennai will be a mid-market plotting market. I'm quite hopeful that we will see success in plotted development. Many of our peers have made a attractive, successful business in plotted. So I'm hopeful that we will also see similar traction. The Chennai one that we are launching this quarter will be the first, and hopefully will be followed up by more such launches. We're also looking at new business development in the parking space, particularly in Bangalore and Pune.
Okay, thank you and all the best. Those are my questions.
Thank you. We'll move on to the next question. That is on the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi Arvind. Congrats on good set of results. And clearly the visibility is now much more there of business operations improving. I have a question on...
Mr. Upadhyay. Sir, can you use the handset mode while speaking and not the speakerphone? It's causing a lot of disturbance.
I'm on handset only. Is it clear now?
A little better. Please proceed.
Yeah, congrats on good set of numbers, and yeah, it becomes much more clearer the way the company is moving ahead and visibility is there. I have a question on this employee remuneration and benefits. Okay, if we look at the 9 months, okay, and even the quarterly, the employee remuneration and benefits is down around 6 to 7%. Okay. So has there been some cost rationalization, or there was some one-off event, or can you just give an idea?
Yeah, so overall, couple of things, Himanshu. One is that as we are expanding the number of projects on which we are doing the construction, we do follow a consistent accounting policy of inventorizing some of that cost, and that is one key aspect. The second one really is that what you are possibly seeing is the India's accounted cost. And to that extent, there are costs which are at JV level also, which are getting incurred. At an aggregate level, if you look at consistently, in terms of remuneration increase, you usually see about 10-11% of increase year on year on a decent growth trajectory.
And Himanshu, we are actually building the organization steadily, because as we are growing the business, we are building capacity as well as capability. So there is no manpower rationalization. If anything, we are investing in talent. We believe that's going to be one of our key advantages.
No, I agree, because see, last year the revenue in 9 months what we did was 253 crore, okay, including other income. Or if I exclude other income, it was 231 crore. And in these 9 months, it is 351 crore. Okay? But the employee remuneration has moved from 66 crore to 61 crore. Okay? So that was the thing, and hence the question was that even if when my revenue is increasing, my employee remuneration has fallen by 6-7%. Okay?
Yeah, so as I said, two things which are not visible in the numbers which you quoted. One in the inventorization. For example, Bangalore is a market where the project got launched, phase 2 got opened up, is leading to higher inventorization in that particular project. And second is the cost allocations which we do across our projects and across entities. There's a bit of overall optimizations also we would have done in terms of taxabilities from a structuring point of view. In terms of headcount, if you look at annual report, the count would have gone up, levels would have improved, and the increments, etc., would, as Arvind mentioned, have been decent.
Okay. Okay. And see, any timelines for Ahmedabad launch? Means the thing what we had, or we were looking for a partner for quite some time now. So what is the progress on that Ahmedabad launch?
So continues to be an area which is work in process, looking, as we had mentioned in the last couple of calls, for the right anchor to create the location. Still don't have headway on that.
And this year, Murud Raigad, okay, that's 1291 acres, okay. Is it, means we were going to develop with something like government project? Was that, is this that land or what is this project? I am not
so we have 1300 acres in Murud, and now interestingly, we see two axes of growth there. One is the second home market, which from Alibag will sequentially expand to Kashed and then to Murud. And the second is this land is also in the hinterland of the Dighi port, and Dighi port is getting expanded and a lot of investment is coming in area from an industrial perspective. So both of these are opportunities that we are evaluating quite closely, and some combination of that is what we will eventually develop Murud for is the hypothesis stage.
Okay. Best of luck. Thanks for the reply.
Thank you, Himanshu.
Thank you. The next question is from the line of Aditi Chattopadhyay from ICICI Securities. Please go ahead.
Yeah. Good morning. I have a couple of questions.
Sorry to interrupt, Mr. Chattopadhyay. Sir, there's a lot of disturbance from your line.
Okay. Is it better now?
No, sir.
Okay, I'll come back in the queue then. Okay, thank you.
Thank you. The next question is from the line of Ritesh Seth from Motilal Oswal. Please go ahead.
Hi, sir. Thanks for the opportunity. So first question is on, the projects that slipped out. Obviously, you did well in terms of business development and added a couple of projects. But, any specific reason probably you can highlight on where, did we missed out on those projects? Is it just, competition and pricing that was offered, or just any comment on that?
Yeah, so largely competitive dynamics. So look, in any such pipeline, we will have a win-loss ratio. And, we lost one society redevelopment project. We won one. So it was kind of a 50-50 in that space. And there was one other project as well, which got dropped because of some concerns on the diligence front.
Okay, got it. And second, on this Kalyan 2, which we relaunched, we still see not much ramp up in terms of sales, but there might be some bookings that would have slipped over to Q4. But are you overall now happy with the kind of response that we have got for that project? And also, I think I noticed even we have a higher area available for development in Kalyan 2. So just comments on both.
Yeah, so look, as the CEO of the business, I'm never happy until it is 100% sold out, right? But that being said, I think there's been good traction in this launch. I must kind of openly state that we are starting to see some constriction of demand in that segment of the market, the sub 40 lakh kind of segment. That being said, we've got a good response to this launch. You will see the numbers coming through in Q4 because this was launched in December. So much of the bookings will come through in Q4.
Got it. And in terms of launches, while we have highlighted about new project launches that can happen in FY24, that includes the Isar, Hosur, and also the redevelopment one. I'm not sure if you also mentioned Kandivali, but apart from that, any phase launches that are planned in FY24, maybe early part or second half?
So as I said, Mahindra Citadel, which we launched in November, December, that the main launch, what we launched in November, December was a pre-launch. And we will have the main launch in Q1 or Q1 of next year. Nostalgia, as I mentioned, the second phase is getting launched in this quarter. So again, you'll see some of that getting logged this quarter and some of it next quarter. So those are the new phases. Kandivali, as I mentioned, is certainly on track for H1 of next financial year.
Okay, got it. That's it from my side for now. I'll jump back in queue for a few more questions. Thank you.
Thank you.
Thank you. The next question is on the line of VP Rajesh from Banyan Capital Advisors LLP. Please go ahead.
Thanks for the opportunity and congratulations for a good set of numbers. My first question was regarding these housing society redevelopment project. So if you can give a little more detail as to, why is this business more interesting? Does it have higher IRR, and how long does it take to get all the pre-work done to even start the construction? Just wanted to know a little bit more about this new business that we are taking on.
Yeah, so a couple of things on that. One, it gives you access to certain markets where otherwise it will be very hard to participate. So, markets like the western suburbs in Mumbai are fully built out. There's no vacant land available. So redevelopment is really the only opportunity to create a presence there. These also tend to be higher price segment markets, so therefore a stronger gross margin on these kinds of projects. In terms of timeline, we are structuring these deals in a manner where a lot of our costs and investments start coming in only when the site is fully vacated, when all the members have vacated their apartments. So therefore the IRRs are also looking healthy. That being said, this is our first redevelopment project. I'm sure there will be learnings. We are actively looking at the experience that other developers have gone through and learning from those. But we will go through our own learning curve. But I do believe this is an attractive opportunity space, particularly with the Mahindra brand and the kind of trust that with members of these societies. We've had lots of calls ever since we've announced our intent to be in redevelopment. This is the first win we've had. It's been a long process, but hopefully then sets the tone for many others.
Right. So are you saying that between the announcement that you did this month or last month rather, and the time you start working on the project, you are not really going to put any capital into it except some minor fees, etc., that you may have to pay for getting the land use change, etc. Is that the way to understand it?
Yeah, so largely what happens is at this stage, there will be some diligence costs, legal costs. We will start doing design because that is important as we get into discussions with the members about their apartment allocations, etc. Those are the kinds of costs. So it's much more about service costs rather than any land or development costs. Those start kicking in only after the site is fully vacated.
I see. Okay. And then just on the balance sheet side, you mentioned that you will start to think about taking long-term debt. So any idea what the size could be? Because obviously your cost of capital is very, very low, and that's a big competitive advantage. So I was just curious, how much debt are you planning to put on the balance sheet?
Look, I think I'll hand this over to Vimal, but in general, we will continue to be very prudent about leverage. But Vimal, if you want to share any guidance around what we're looking at.
So conceptually the same point, as in going by the land pipeline and assuming that you will have say 15 to 22% of land cost, if it's a greenfield acquisition, there will be upfront cash payout which will be required. Two sources, operating cash flow, upstreaming of cash from internal joint ventures, etc. And the third one will be the long-term borrowings. And all three right now are going, the first two streams, which is operating as well as upstreaming of cash, are going fairly strong. And the third one will be borrowings. Debt equity right now is extremely low, and therefore we don't have any challenges in terms of raising it at very, very competitive rates.
Right. But you don't have any particular figure in mind as yet about what this term loan will look like?
So our going in position, say especially from finance point of view, is that that will never be the constraint. So far as we are getting good land parcels, we'll go ahead and invest.
In addition to what Vimal said about internal cash, our cash accruals from a collections perspective as well as upstreaming from the JVs, we also have forward visibility on cash because of the strong pre-sale. So in many of the projects, it's only a matter of time as long as construction progresses that the cash will come in. So in that sense, there's a lot more predictability on the next few quarters of cash flow as well.
Right. Okay. And then talking about your GDV pipeline that you were discussing earlier, so what is typically your win ratio in these type of deals? Or not win ratio, but how how much of that actually materializes in your experience over the last 2-3 years?
Very hard to say, and it's early days. Calculating ratios on a small base is fraught with risk. So I won't venture into talking about win ratios, but as when I think Parikshit asked this question, typically 2 quarters is what it takes for these deals to either convert or get dropped.
Right. I was just curious because you have had the experience for the last 2-3 years now, so you would have some sense of how much are you going to convert into potential pipeline versus them dropping off for whatever reason.
Look, 2 years back we had said we want to do about 2,000 crores of annual GDV addition. We are well above that. We will continue to build on top of that. So anywhere in the 3,000 to 4,000 crore range of annual GDV addition for the next year or two, I think sets us up very well.
Okay, great. Wonderful. Thank you. That's all I had, and all the best.
Thank you.
Thank you. The next question is on the line of Prem Khurana from Anand Rathi Shares. Please go ahead.
Yeah, thank you for taking my question and congratulations on good set of numbers this quarter. Sir, the idea was to try and understand our business development activity a little better or portfolio augmentation side a little better. So when I look at the numbers, essentially over the last 2 years we've done almost around 8 odd transactions with GDV potential in excess of 8,000 crore rupees. But when I look at the split, so there are 2 projects, Kandivali and Pimpri, wherein it is in excess of 2,000 crore rupees each. So these 2 in itself are almost 60%. If I were to include Dahisar, the 3 projects make up almost around 70% of the total potential that you have on books now, or what you've been able to add over the last 2 years. So the idea was to try and understand how do we think about the sizing of these projects, because Kandivali and Pimpri seems as if you want to create value over a longer period of time. With each phase you would want to raise prices and generate more value for the shareholders. And you have something like Kanakpura or some of these recent additions wherein it's around 400-500 crore quick churn kind of project. So do we go with any thought in mind that we want to have this kind of balance between quick churn and long-term value creation, or it is as if as the opportunity comes and we evaluate and then go ahead with the opportunity?
Great question, Prem, and I think we had talked about this maybe 3 or 4 quarters back. Ideally, we would like to be in the let's say 500 to 1,000 crore GDV range for each of these projects. And particularly in cities like Bangalore and Pune, I think that's a nice sweet spot because it allows you to potentially launch in a single phase or 2 closely spaced phases, construct quickly and get out. And given our focus on IRR, it's important that the overall project schedule in terms of land acquisition to completion is kept as short as possible. Typically within 4 years, 4.5 years is what we target. But that being said, as you rightly pointed out, there are strategic opportunities like Kandivali and Pimpri where we've taken a call to flex that upper limit. In the city of Mumbai, we will typically see deals which are north of 1,000 crores, just given the price points in the market and the kind of land supply side dynamics that exist. In Pune, Pimpri was potentially an exception at 2,000 now or 2,400 crore or 2,300 crore GDV. Again, there typically we would do 500, 700 crore kind of GDV transactions. But in certain strategic markets, Pimpri, this was, is a market that we have had significant presence in. This is our 4th or 5th project in Pimpri. Similarly, we will look at other markets like Kharadi and Hinjawadi, etc., which are very important micro markets in Pune, where if the right opportunity comes across, we are open to looking at larger GDV transactions.
Sure. And on the redevelopment side, because now we have experience dealing with these societies, so how is our experience with them in terms of timelines, let's say compared to dealing with landowners and individual? Here you are required to manage expectation of number of people, right? The society would comprise a number of members and residents as well. So is it fair to assume that the conversion timelines would be slightly longer for society versus the open plots or the JDAs that you do?
Significantly longer, not just slightly longer, because what you're having to deal with is in a typical land transaction, you deal with one landowner, maybe a family where there's 2 or 3 partners or family members who are taking the decision. Here you often have 100 plus members taking a joint decision, and it is a highly emotive decision, right? This is their house, they've lived in it for 20, 30 years, potentially this is second generation living in the house. So it is not an easy decision to take in terms of which offer to go forward with, whether to redevelop at all, etc. So it tends to be a much more iterative process in the transaction that we won. There's been multiple rounds of discussions, multiple general body meetings that the society has gone through where we presented, and it's the same case in the one that we lost as well. So there's many reasons when a general body meeting is called for the decision not to be taken rather than for it to be taken. And one has to be patient and work through that.
Sure, certainly. And just one last bookkeeping question for Vimal. So, sir, in our presentation on slide number 33, we give segment performance. And when I look at the residential vertical, our net debt seems to be up around 120 odd crore rupees sequentially. But when I try to kind of reconcile this with the kind of collections that we could have in this quarter and the construction spend that was incurred, there was a large gap. So why would we get to have this 120 odd crore rupees of sequential jump in our net debt for the residential vertical? Concall is down, I understand, but in the residential vertical, it seems that it's gone up.
So you're saying net debt has gone up versus last quarter?
Yes, sir. So for the quarter, it's around 94 crore rupees, and if you were to refer to your last quarter presentation, it was...
The position you're seeing is 31st December position, right?
Yeah, 31st December versus 30th September. Sequentially, 120 crore rupees of rise.
Yeah, that's right. So it's all for the good is what I'll say. There are, obviously, as Arvind mentioned, there are pipeline and therefore there's a funding requirement which will be there.
Okay. But
the land acquisition.
Okay. But the Kandivali payment is still not done, right? And because it is always reflecting as a part of other financial liabilities. So, which is why I was wondering, I mean, if it was, if there was any other payments that you would have made during the quarter.
Yeah. So two things. One is that what you are seeing on the liability side is not the full liability because part of the consideration has been paid out.
True.
One. Second is Thane land conveyance happened last quarter.
Oh, okay.
And towards that conveyance, there were payouts which we would have done to state authorities, etc. So both of those were also the.
Sure. And 70 crores would have gone to the partner as well. I mean, the Mahindra homes, the buyback that they would have done. So that again would have impacted to a certain extent, right?
Absolutely, absolutely. So as a data point, and this is not specific to your question, but I just do want to share this. In the last 9 months, we have shared almost about 200 crores with external stakeholders, including, for example, say IFC World Bank or Actis or other partners which we have. So to that extent, it again indicates a robust cash flow which we are experiencing in the last few quarters.
Sure, sir. Sure, that explains. Thanks a lot, and all the very best for future.
Thank you. The next question is from the line of Ritesh Seth from Motilal Oswal. Please go ahead.
Yeah, thanks for the follow-up opportunity again. My question is on redevelopment. So, while we are seeing not much competition in terms of outright land, but at the same time, redevelopment, does sound a good opportunity even for smaller developers. So, what kind of competition we are seeing in redevelopment, especially where we are targeting, those group or a group society redevelopment rather than just one tower. So, any comments on that?
So we see quite a lot of competition in the society redevelopment space as well. There are specialist players there, both very local players in particular neighborhoods who have built a strong reputation, but also players at the city level who've built a portfolio of redevelopment assets. And just like us, there are other developers who are dipping their toes and starting to embrace redevelopment who've traditionally not done redevelopment. So we are seeing a full set of competition in redevelopment, which we also see in outright deals. we are not the only ones who are seeing this as an attractive opportunity. Many other leading developers are also pursuing this.
In terms of the project we won in Santa Cruz, did we offer a better growth in terms of area, or is it the brand which attracted the the tenants to choose us as a redevelopment partner? Because I'm sure there would be enough competition for that project as well.
So the way these typically play out, and I'm giving you a very general answer, there's often first a weeding out of developers that the society would like to do the deal with. So there is kind of that technical qualification, if I can call it that, from a traditional procurement perspective. And then among that, there is then a pure commercial discussion that happens. So yes, in this situation, we did offer the best commercial terms, but we were also then in a shortlist which comprised a peer group, which was very credible. So we're not then at that stage competing with just any other developer.
Sure, got it. And just if you can provide a split of the pipeline that we have right now, around 5,500 crore. Out of that, how much is outright land or redevelopment, and in particular, which cities that they are targeted in?
Yeah, I think Parikshit had asked this earlier. So just to reiterate, roughly 5,500 crores total, split as 2,500 in Mumbai, 2,000 in Pune, 1,000 in Bangalore. And if I split it by transaction type, roughly 3,500 of outright, 1,000 of JDAs, and 1,000 of redevelopment and plotted.
Sure, got it. And just lastly, I don't know if I missed it out, but update on Thane, is it still FY24 or spilled over to 25?
We've always said 25, early part of 25, so it stays there.
Okay, got it. Thanks for answering my questions. That's it from my side, and all the best.
Thank you.
Thank you. The next question is on the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Thanks for the follow-up. So, Arvind, my question is that last 2 years back, we have set a 2,000 crores of CCTV addition and 2,500 crores of pre-sales by 25. And we've been doing 2x of that, but still I see on the slide FY25, 2,500, so which should ideally have gone up by 2 times. So any thoughts there?
Yeah, so look, as you kept pushing me and I've stuck with that stand, we would certainly like to do better. Let the land visibility build up a bit more, and we can kind of update those milestones. So 2,500 is, as I've always said, it is a step in a journey. If we achieve it before FY25, great. I mean, it just means that the journey is well on its course. It was never intended to be a destination. So.
The second one is on the spillover of, you did touch upon that there was some spillover of sales on the December launches which will get reflected in Q4. So between all these new launches which you did in this quarter, Pune, Bangalore, and MMR, so how much would be the spillover sales which would have not got recorded under this quarter, and maybe will just flip over from December to next quarter?
I think let's wait for this quarter to close for those numbers to come out. But we've got good response to those launches, Citadel as well as Kalyan. I think Eden Phase 2, most of it has been recognized in the last quarter. There's spillover from last quarter to this quarter. Those are the two which came in at about December. So there was some booking that happened last quarter and some will happen this quarter.
But in this 450 crores of sales, how much will be the new launch contribution?
I don't have that on the top of mind.
Okay, maybe I'll take it offline.
We can take it offline.
Yeah. And just lastly on this question on the warehousing, so we had a tie-up with Actis of 100 acres. So when do we start monetizing this land bank in Jaipur? Which year it comes in? And lastly on that operating cash flows of 9 months, so post-construction and other period costs, what would have been the net operating cash flows for the 9 months?
Yeah, so the Actis joint venture is building out nicely. We are in the phase where the company has been incorporated. We are building out the management team. and hopefully in the next 3 months, the key leadership team should be in place. And that's when we will start bringing the land, the seed assets in, as well as look at virgin assets, greenfield assets as well, to build out the business. So over the next year or so, I think that business will start getting built out quite nicely. As you know, we are a minority partner in that, so we'll be largely playing kind of a board and governance role rather than an operating role there, in addition to providing the seed assets. Vimal, you want to talk about operating cash flows?
Operating cash flows, so overall, for the first 9 months, primarily because of very solid action on the IC leasing side, which has been talked about, of about 254.85 crores. Similarly, on the collections and sales side, we had operating cash flow positive of about 450 crores in the first 9 months. And majority of this has been deployed either towards acquisition of new land parcels, or buying more development potential in the existing land parcels, or towards payment of our existing stakeholders.
Okay, 450 is after construction cost and after period cost, employee cost and corporate overhead. And suppose that is generated 450 crores of cash flow.
After every operating cost, including corporate overheads.
And payout of partners. Does it include payout to partners also, which you mentioned about 200 crores?
The operating number, and to that extent, the financing or the investing activity is not included.
Okay, got it, sir. Okay, understood. Thank you very much. Thank you.
Yeah.
Thank you. The next question is on the line of Ronald Sioni from Sharekhan. Please go ahead.
Yeah, good morning, sir, and congratulations on good numbers. My first question was, the pre-sales or sales booking we have done over the last 2 years, and say before that, what kind of movement you have seen in terms of the gross margin, operating margins, and return on capital employed? Sales done before 2 years and new sales, over the trailing 2 years.
Sir, we are not able to hear you clearly.
Yeah, Ronald, you're not clear at all.
Can you just
Am I audible now?
Yes, much better.
Yeah. So first question was, the sales booking which we have done over the trailing 2 years, and before 2 years, and so what kind of margin trajectory you have seen, say before 2 years and last trailing 2 years, in terms of operating margins and gross margins and return on capital employed? How we have evolved over the trailing 2 years, the new launches which we have done?
Yeah. So, a couple of points here, and this is more like a summary of what we have been responding to in the last 4 quarters or so. In general, our sales numbers first, and then we get into the gross margin numbers. We were at about 700 crores per year till about F21, and then last year was about 1,000 crores, and right now it's closer to 1,500 crores as we speak. Now, with every passing quarter, there are 2 things which we have done. One is a much stronger control on the cost, and that comes on the with very active interventions we have got on the design side as well as the costing sides to get our estimations much more accurate, closer to reality, so that we can ensure that realizations and net realizations are much superior. And the last few launches which we have done, we have usually done better than our guardrails, which, for example, on the profitability side, all costs taken will be closer to about, say, 18% or upwards. And this is about 4-5 percentage points better than the old projects which you just talked about.
Yes. So 18% on the operating level, which was better by 4 to 5%, you mean to say?
Yep.
Okay. And second question was, in terms of what we have seen, the rise in the interest cost. So, have you kind of seen some slackness or sluggishness in the, especially in the affordable housing side, or in terms of footfalls or say closing of sales by customers? So, what kind of interest rate impact have you seen, especially on the affordable projects?
Yeah, so Ronald, I covered this in my opening comments. We are seeing some constriction in demand on the affordable side, particularly less than 40 lakh kind of ticket size. It's a combination of higher mortgage rates and also inflation, which is starting to pinch affordability in that segment. That being said, it is still a robust market. So while the overall market might be kind of flat or declining compared to the mid-market, which is growing quite significantly, within that, the stronger players are still seeing good traction.
Okay. And sir, last question would be, setting aside the 40 lakh categories, in the upper categories, what kind of percentage on an average, there is a mortgage lending taken by the customers?
Roughly 60 to 70% of sales in that segment happens through mortgage.
Okay. Thank you very much, sir. And best of luck.
Thank you.
Thank you. The next question is from the line of Manan Patel from Erawat Capital. Please go ahead. Sorry to interrupt, Mr. Patel. We are not able to hear you. Sir, your audio is not audible.
Am I clear now?
Sir, your voice is sounding a little muffled.
Yeah, you can go ahead. We can hear you now.
Sir, the first question is related to IC business. I want to understand, this quarter we had 8 acres of sales in the SEZ, and we were talking about some policy change. So has that policy change happened, or how do you think about that SEZ part of the MWC?
So we're still waiting for clarity on that. So this is the DESH bill that was announced in the last budget. And the rules were to be formulated around how that will get implemented in the SEZs, which effectively the spirit of that is to open up the SEZ for units that also serve the domestic market. The specifics are still awaited, and we're hoping in the next few months we will have some clarity on that.
Sir, second question is, you mentioned to one of the previous participants that 450 crores of operating cash flows in the 9 months. So I understand it would be lumpy in our business, but for full year basis, in general, should we assume a north of 600 crores cash flows over next few years?
No, Arvind articulated it very well, FY25 number. So to that extent, directionally, the operating cash flow is going to be sort of reflective of the sales trajectory which we are on. Yeah.
And so last question, even though we have very less land left in MWC Chennai, but realization came down to some extent. So any particular reason for that?
No, fundamentally very limited land parcels, and the location of those land parcels can be inside the World City. There are few land parcels which are residing outside of the World City premises, in that sense, what we call as outside boundary lands. And every land transaction to that extent is negotiated, and depending on the location, trajectory, overall area, etc., the pricing gets fixed.
Yeah, going forward also you will see us doing some transactions of what we call outside boundary land, which is beyond the boundaries, the planned boundaries of the World City. Those are significantly lower priced. There's fundamentally no infrastructure, none of the World City infrastructure is extended there. So it's a different market altogether.
Thank you so much, sir, and wish you all the best.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Arvind Subramanian for his closing comments.
Great. Thank you once again, all of you, for participating in the call. As we mentioned, we are on a very steady and planned growth trajectory. The numbers are reflective of that on all the operating metrics, whether it's residential pre-sales, industrial listing, cash flow, or land acquisition. These are all trending in the direction that has been indicated. And with your support and blessings, we hope to continue on that trajectory. We are seeing a strong cycle in the real estate sector, so there's favorable tailwinds as well, which we hope to take advantage of. Thank you again.
Thank you. Ladies and gentlemen, on behalf of Mahindra Lifespace Developers Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.